From the bustling marketplaces of antiquity to the gleaming towers of modern innovation, the spirit of venture capital has coursed through the veins of history. It's a story as old as commerce itself, a testament to human ambition, the desire to explore uncharted territories, and the willingness to embrace risk in pursuit of reward. This is a journey that has shaped civilizations, fueled technological advancements, and transformed the very fabric of our world. It's a narrative woven into the tapestry of human progress, a testament to the power of bold ideas and the unwavering belief in a brighter future. We often associate venture capital with cutting-edge technology and Silicon Valley, but its origins lie much further back in time. To truly understand venture capital, we must embark on a journey of our own, a journey that will take us from the ancient Silk Road to the heart of modern innovation. Along the way, we'll encounter intrepid explorers, visionary entrepreneurs, and astute investors, all bound by a shared belief in the power of human ingenuity. This is the story of venture capital, a story that continues to unfold even as we speak, shaping the world of tomorrow and beyond. Join us as we delve into the history of venture capital and explore its profound impact on the world. Ancient trade routes like the Silk Road were an early venture capitalist's lifeblood. Our journey begins millennia ago amidst the caravans and bustling trading posts of the Silk Road. This network of ancient trade routes, stretching from the bustling markets of Chang'an in the east to the vibrant heart of Constantinople in the west, serves as a powerful testament to the early spirit of venture capital. Merchants, driven by the allure of profit and the desire to connect distant lands, embarked on perilous journeys, their caravans laden with silks, spices, and precious goods. These early entrepreneurs were the embodiment of venture capital, taking calculated risks, investing their capital in goods and transportation, and betting on the demand for their wares in far-off markets. The Silk Road was not merely a trade route, it was a conduit for knowledge, culture, and innovation, driven by the very essence of venture capital, the willingness to embrace risk for the potential of reward. Financing these expeditions were early financiers, individuals and families who saw the potential for extraordinary returns. They provided the capital, shouldering the risk alongside the merchants, their fortunes intertwined with the success of each caravan that traversed the treacherous yet lucrative Silk Road. These early investors were the precursors to modern venture capitalists, their decisions shaping the flow of goods, wealth, and innovation across continents. The Silk Road exemplifies how venture capital in its rawest form has long been a catalyst for global trade, cultural exchange, and economic growth. Imagine, if you will, the bustling heart of a Silk Road city. Amidst the throngs of merchants and traders, a different kind of transaction is taking place. In a dimly lit chamber, a wealthy individual listens intently as a caravan master lays out his ambitious plan. He speaks of a new route, fraught with danger but promising untold riches. A journey to distant lands where exotic spices and precious gems await. The merchant agrees to finance the expedition, providing the necessary capital in exchange for a share of the profits. This embodies the essence of early venture capital. The first venture capitalists often invested up to 50% of their wealth in these high-risk ventures, and so early venture capitalists and merchants formed complex agreements, reflecting the risks and rewards of Silk Road trade. Contracts outlined investment terms, equity stakes, and profit sharing. Wealthy individuals pooled resources, forming syndicates to back multiple caravans. This diversification strategy mitigated losses and maximized returns. The financial success of these early venture capitalists was tied to the success of the caravans. The impact of these early venture capitalists extended far beyond the caravans they financed. The wealth generated from successful Silk Road expeditions fueled economic growth in cities and towns along the trade routes. As investors reaped the rewards of their ventures, they reinvested their profits, stimulating local economies and fostering the growth of new industries. The demand for luxury goods from the east, driven by the caravans returning with exotic treasures, led to a surge in craft production. Skilled artisans, from weavers and ceramicists to metal workers and jewelers, benefited from the influx of capital as investors financed workshops and provided working capital to expand production. Entire industries rose to prominence, catering to the demands of a market hungry for the riches of the Silk Road. Beyond the economic impact, venture capital on the Silk Road also played a crucial role in facilitating cultural exchange and the dissemination of knowledge. The caravans, funded by investors seeking profit, inadvertently became vectors for the transmission of ideas, technologies, and artistic traditions across vast distances. As goods flowed along the Silk Road, so too did knowledge, bridging cultures and shaping civilizations. The very nature of venture capital, with its emphasis on innovation and the pursuit of new opportunities, fostered a spirit of exploration and discovery. Investors eager to identify the next lucrative trade route or uncover new sources of valuable goods financed expeditions that pushed the boundaries of the known world. These journeys, driven by the pursuit of profit, led to the mapping of new lands, the establishment of new trade routes, and a deeper understanding of the interconnectedness of civilizations. As the Silk Road faded into history, a new era of exploration dawned, and with it, venture capital embarked on a journey that would reshape the world. The age of exploration witnessed a dramatic expansion of venture capital's reach. Intrepid explorers, driven by a thirst for knowledge, wealth, and glory, set sail into uncharted waters backed by venture capitalists of the high seas. Ships had to be built, outfitted with supplies, and manned by experienced crews. The risks were immense: storms, disease, piracy, and the unknown. Yet the potential rewards were equally enticing: new trade routes and valuable resources. To secure funding, explorers turned to diverse investors, each with their own motivations. The age of exploration marked a pivotal shift in venture capital, laying the foundation for the globalized world we know today. As the age of exploration gave way to the Industrial Revolution, venture capital found fertile ground in the burgeoning industries transforming the world. The late 19th and early 20th centuries witnessed a wave of innovation, with new technologies like the steam engine, the cotton gin, and the telegraph reshaping societies and economies. These inventions, while groundbreaking, required significant capital investment to move from the drawing board to the factory floor. Enterprising inventors and entrepreneurs seeking to capitalize on these technological advancements turned to a new breed of financiers willing to back their ventures. These early venture capitalists, often wealthy individuals or families with a keen eye for opportunity, recognized the transformative potential of these new technologies. They provided the crucial funding needed to build factories, purchase equipment, and scale production. These investments, while not without risk, fueled the rapid growth of industries that would come to define the modern world. Venture capital played a pivotal role in the development of railroads, steel production, oil and gas exploration, and the mass production of consumer goods. These industries in turn created jobs, spurred economic growth, and transformed the lives of millions. The Industrial Revolution, with its emphasis on innovation, entrepreneurship, and technological advancement, provided fertile ground for the evolution of venture capital. It was during this era that the foundations of modern venture capital began to take shape, with investors increasingly focusing on high-growth, technology-driven ventures. The stage was set for the emergence of a new era of innovation, one that would see venture capital play an even more pivotal role in shaping the future. The tumultuous events of the first half of the 20th century, particularly the two world wars, proved to be an unexpected catalyst for technological advancement. Governments, faced with the existential threat of war, poured resources into research and development, seeking technological advantages on the battlefield. This wartime innovation, while driven by necessity, had far-reaching consequences, leading to breakthroughs in computing, aviation, materials science, and countless other fields. As the world emerged from the shadow of World War II, a new era of prosperity dawned. Governments, eager to rebuild their economies and capitalize on wartime technological advancements, created policies that encouraged entrepreneurship and investment in new technologies. This period, often referred to as the post-war boom, saw a surge in venture capital activity as investors sought to capitalize on the wave of innovation unleashed by the war. The transistor, invented in 1947 at Bell Labs, became a symbol of this post-war technological revolution. This tiny device, capable of amplifying and switching electronic signals, paved the way for the development of modern electronics, including computers, radios, televisions, and countless other devices. Venture capitalists, recognizing the transformative potential of the transistor, played a pivotal role in funding the companies that would bring this technology to the masses. This era marked a turning point in the history of venture capital. The focus shifted from backing established industries to investing in emerging technologies with the potential to disrupt entire sectors. Venture capital became increasingly associated with high-risk, high-reward investments, and a new breed of venture capitalist emerged, one willing to bet on the visionaries and entrepreneurs who dared to dream big. In California, the Santa Clara Valley transformed from orchards to Silicon Valley, driven by post-war prosperity, government R&D investment, and entrepreneurial talent. Stanford University, led by Frederick Terman, played a pivotal role, encouraging students like Hewlett and Packard to start companies, setting the stage for Silicon Valley's tech boom. Today, Silicon Valley is home to over 2,000 tech companies, and has attracted more than $100 billion in venture capital investments. Arthur Rock, a Harvard graduate, recognized the potential of the semiconductor industry. In 1957, he secured funding for the Traitorous Eight, including Gordon Moore and Robert Noyce, who founded Fairchild Semiconductor. Rock's investment in Fairchild was a landmark, demonstrating the power of backing ambitious entrepreneurs with disruptive technologies. This move laid the groundwork for the modern venture capital industry, with Fairchild Semiconductor generating over $2 billion in revenue by the 1970s and spawning numerous successful tech companies. Sequoia Capital and Kleiner Perkins, founded in 1972, reshaped the venture capital landscape. They provided not just funding, but strategic guidance and access to vast networks. Their early investments in companies like Apple, Google, and Amazon revolutionized industries and set new standards for venture capital. In the late 20th century, venture capital investments surged by over 1,000%, transforming the tech landscape. The dot-com boom brought venture capital into the mainstream, fueling countless internet startups. Despite the bubble burst, venture capital evolved, focusing on sustainable business models and sound governance. New models like micro-VC funds and crowdfunding democratized access to capital, expanding venture capital's reach. Venture capital investments have skyrocketed in the 21st century, reaching over $300 billion globally in 2021. The rise of the internet, mobile computing, and social media created new industries. Venture capitalists backed tech giants like Google, Facebook, and Amazon, fueling rapid growth. New venture capital hubs emerged globally, spreading innovation beyond Silicon Valley. In 2009, Marc Andreessen and Ben Horowitz founded Andreessen Horowitz, known for its bold investment strategy. They took a hands-on approach, providing portfolio companies with resources and expertise. Their success with companies like Airbnb and Facebook reshaped the venture capital industry. Today, they manage approximately $20 billion in assets, making them one of the most influential firms in Silicon Valley. The democratization of venture capital expanded access to investment opportunities. Crowdfunding platforms and online angel networks allowed individuals to invest in startups. This shift diversified the investor base and fueled innovation globally. As we look to the future, we see technologies and companies that will define the 21st century and beyond. Artificial intelligence, biotechnology, renewable energy, space exploration, and countless other fields. However, the future of venture capital is not without its challenges. According to the most recent data from 2023, venture capital investment in the US totaled approximately $170 billion across roughly 15,000 deals. This represents significant decline from the peak of $345 billion invested in 2021. There are concerns about emerging investment paradigms like crowdfunding and online applications. The growing concentration of venture capital funding in a handful of tech hubs raises questions about the sustainability of this model. And the increasingly crowded and competitive VC ecosystem raises alarms about market saturation and valuations. Macroeconomic forces have not been helpful of late, but in the end, as long as there are visionary entrepreneurs with bold ideas, there will be venture capitalists ready to back them.